Welcome to qiphyedu. Today we'll be looking at Economics A2 level, paper 33, October-November 2022. Alright, let's start. Okay, so for the first question, it says, when is Pareto efficiency achieved? Now, Pareto efficiency is achieved when your output is basically both productively and allocatively efficient. So if we look at the four options here, A will be the correct answer. Okay. Now, B says when everyone has equal amounts of goods and services, which is not correct. Because if let's say everyone has equal amounts of goods and services, this is basically this is basically nothing to do with productively efficient in this case. And yeah, so that's why it's not B. And C, when social benefits are greater than private benefits, this is not correct as well. And D, when social marginal benefit is greater than social marginal cost, which is not correct. So answer is A. Question 2, the transport authority in a city is considering building an underground railway to reduce traffic congestion. Okay, so underground railway and reduce traffic congestion. And which combination will represent an external cost and an external benefit of the use of this railway? So external cost and external benefit, this means that people who are actually benefiting, and these people are people who are not using the railway, right? So let's take a look at the four options here. A says the external cost is the compensation, it's basically when the compensation is paid to businesses displaced by construction work, which is not correct because they are the ones directly being affected. And then the external benefit here is foreign tourists paid to use the railway, which is not correct. Now, foreign tourists that use the railway, they are basically directly using the railway system rather than actually, using some other forms of transport. So they are directly being benefited, not externally. All right. So B, it says nearby residents suffer noise from passing trains, which is correct. People who live nearby who don't use the trains, but then they have to suffer. These people then have experiencing external costs. And then external benefit, it says there are fewer emissions to hospitals as air quality improves. Yep. So so this is correct as well. And then C, overtime payments are made to workers to finish building the railway on time. This is not the external cost. The people who are actually building the railway are directly building it. So this is not external cost. It's a company that's actually have to bear this overtime payments, right? So this is not correct. And then external benefit, productivity increases as employees arrive at work more punctually. This is not correct because employees arriving at work more punctually because of using an underground railway, or you could also say because of a reduced traffic congestion. But either way, it could be both. So the accuracy of this thing could be a bit lower compared to B. B is completely correct. So yeah, it could be wrong, it could be correct, depends. Here it doesn't really say anything about whether or not it's the fact that employees are actually using cars or they're using the trains, right? And D, reduced traffic means that there are fewer road improvements needed, which means that you have less cost. So yep, so good. And then external benefit is motorists spend less on fuel. If there's traffic congestion, yes, there's higher fuel consumption. But then to say that it's an external benefit is kind of it's not really a correct way of mentioning it. It's just that people get to work slower. So it doesn't exactly have to have an increase in traffic congestion that the traffic is in a complete standstill. Then yes, it may be possible. So it's kind of vague in that case. So if let's say an external benefit of motorists spending less on fuel, this would be like maybe let's say the cost needed to transport petroleum is lower, so indirectly motorists spend less on fuel, something like that. But this is not how it works, so D is not correct. So answer is B. Question 3, the diagram shows the marginal private benefit, marginal private cost, and the marginal social cost of a firm producing chemicals in a free market price is at P1. So that means it's this point. Which one quantity measures the overproduction of chemicals resulting in the negative production externality? Okay, so if you produce at P1, your equilibrium is basically at well, technically, if you look at this graph, the equilibrium is at Q3, and then if the quantity is basically being overproduced, if it's overproduced, this means that your marginal social cost is higher than your marginal product cost. So in that sense, it should be around this portion. Okay, this portion. You can see here that overproduction is basically because in this case, we will want to produce at a point where the MPV or basically when the MSC equals to the MSB. Now, because this here is talking about production externality, so we are assuming that MPV equals to MSB. So MPV equals to MSB would be here, right? But here we're producing at this point. So that means that we are producing more from Q2 to Q3. So that means that the overproduction is basically this entire quantity. I'm not talking about the entire area, but like the entire quantity from Q2 to Q3. Therefore, the answer here should be C. Question 4. The diagram shows the market price and equilibrium quantity of coffee consumed by an individual, Joe. Joe buys X cups of coffee at $2 per cup when she visits her favorite cafe. When she's there, the cafe owner says it is offering unlimited free refills, and how is her consumption most likely to change? Now, for this question, basically we're talking about marginal utility. So if you look here, it says Joe's demand for coffee will increase from X to Y when her total utility for coffee is 0, which is not correct, right? And then B says Joe's demand for coffee will increase from X to Y where her marginal utility for coffee is 0, which is correct. Well, this curve here is basically we're talking about marginal utility. Your demand curve is basically a marginal utility curve. So demand for coffee will increase, but if let's say the marginal utility for coffee is 0, then basically Joe will not demand for more coffee. So, and then yeah, that's a correct answer. C, Joe will not drink extra coffee because his marginal utility is less than $2, which is incorrect. She will drink more coffee, but she won't drink after Y, which goes to which basically, brings the price to negative or the marginal utility to negative point, so it's incorrect. And D, Joe will not drink extra coffee because her total utility will fall. Joe will not drink extra coffee because the total utility will fall is incorrect. People would normally drink to the point where they would maximize their utility. So even though the marginal utility decreases, that doesn't mean that he or she would not actually consume to the point where it reaches the maximum. So D is incorrect. Question 5, the diagram shows the consumer's initial budget line, which is GH, and a set of indifference curves IC1, IC2, and IC3 for goods R and S. The original equilibrium for the consumer is point X. The inflation rate is rising faster than money incomes, and what will be the most likely new equilibrium for the consumer if all real income is spent? So you can see originally it's at IC1 and GH, right, this point. And then here the inflation rate is rising faster than money incomes. And then what will be most likely equilibrium if all real income is spent? Okay. So based on this, we need to look at income. So income effect means that you can buy less, or in this case, it's inflation rate. So inflation rate is rising faster. This one here, it should be income effect. So income effect, you need to shift it downwards like this. And then when you shift it downwards, you can see that it touches D. That's the tangent point. And so this means that now you can buy less of, basically buy less of two goods because of the fact that there's a higher inflation rate, meaning that you need to spend more and your money income is getting lower. So I say it's D. Question 6, the diagram shows an individual's budget lines and indifference curves, and the initial budget line is JL. Now there is then an increase in the price of good Y. and which distance represents the substitution effect of the increase in price of good wire. Okay, so originally it's at point T, and then there is an increase in the price of good wire. So increase in price of good wire means that the margin line would then shift left. Okay, shift to the left, and then when it shifts to the left, this means that it's key now instead of JL, now it's JK. So at margin line JK, this is, and then basically we need to look at the point where it's basically when there's a substitution effect, right? So once there's like an increase in price of a good wire, you see that it becomes margin line JK, and then we need to shift this JK curve out again. But then this time we are not actually going back to JL. We are actually shifting it out parallel in a parallel form. So you can see dotted lines here. So you can see there's dotted lines here. All right, and then you can see that in order to maximize the utility right now, instead of the line now actually being tangent to T, it's now actually it's basically now at point S. Therefore, the distance that represents substitution effect would be on the same it's basically on the same indifference curve, but because of the fact that now you can buy less of good Y, looking at our maximum combination tokens that we can purchase with that will bring you the same margin utility. This means that the distance that represents the substitution effect of the increase in price of good Y would be this distance. So instead of T, now we shift up to S. So the distance would be TS. So answer is C. Question 7, in which type of market structure are commercial banks usually found? Okay, commercial banks are normally, there are not going to be a lot of commercial banks out there. Like in Malaysia, for example, there's not really a lot of commercial banks. There are only a few. So basically, in an environment where there are only a few banks, this means that they are actually an oligopoly. Because you can see for ABC, all it says perfect competition and monopolistic competition. The problem here is that perfect competition is basically when you offer the same product. You offer the same product, and when you offer the same product, you're not competing with each other because of product differentiation. So in this case, right, people can choose whatever banks they want, which definitely is not the case for commercial banks. So AB is wrong. And C, it says monopolistic competition. Because the competitive market prevents them from making excess profits, which is incorrect. Commercial banks can make profits. And yeah, so, and it's also not monopolistic competition because monopolistic competition means that there's a lot of banks out there, which is not correct. And there are only a few banks in general. So you can see D, it says oligopoly because they are affected by the actions of other banks, which is correct. If let's say a bank increases interest rate, then people will normally go and save it at the bank rather than actually saving in this bank. So it's oligopoly because of that. And if let's say some other banks that actually offer a lower loan, because a loan with a lower interest rate, people would rather go to get loans at that bank instead from let's say the original bank. So that's why when other banks actually decrease the interest rate, it will actually affect that bank in general. So it's oligopoly. Question 8, the manufacture of some sports equipment is dominated by very large firms, but there are also smaller firms in the industry. What enables a small firm to exist in such an industry? Okay, manufacture of some sports equipment dominated by large firms and also smaller firms. Okay, that means that so basically, let's say that there are smaller firms in the industry, there's no way they are staying because of economies of scale. Economies of scale basically when you increase your scale production and also lowering your costs. In this case, it's no. So if you look at A, B, C, D, let's see the options. A, it says high concentration ratio that reduces competition, which is not correct. And B, it says high startup costs that occur in a contestable market. If let's say there's high startup costs, then normally small firms won't come in because they won't be able to earn the profit. And C, decreasing average cost as a large firm expense, small firms will be at a disadvantage. So it's supposed to be D, a requirement for personalized equipment. So answer is D. Question 9, the marginal cost curve of a firm passes through the lowest point of the firm's what? So the marginal cost curve of a firm, it will look something like something like this. It supposedly should undercut the lowest point of the firm's average variable cost curve, so answer is B. Oops. Question 10, what would definitely be abnormal profits? Okay, abnormal profits is basically the, basically if you look at, basically abnormal profit would be profits that you earn that, basically higher than your normal profits, right? So 10, let's look at A, B, C, D. A, it says the extra revenue received from the sale of a farmer's land to a house building firm. Not correct. Because here it says definitely B, alright? And B, the extra revenue received by a firm from an unexpectedly large increase in demand. Now, even though you have an extra revenue, that doesn't mean that you have extra profits, because revenue, if let's say it doesn't, if you minus your cost and it equals to zero, there's no profit. Profit is basically, profit is basically the money that you earn from actually all these sales. So C, the total revenue from the sale of firm's product in excess of total variable cost of the firm. This is incorrect. So answer should be D, the total revenue in excess of total cost of the firm above the minimum needed to keep the firm in business in the long run. Yeah, so above the minimum, this is definitely correct, in excess of total cost. So answer is D. Question 11, the diagram shows the long run average cost curve LRAC for a firm. Which combination of movements correctly describes each type of economy or diseconomy of scale? Alright, so internal economies of scale. This one, if you look at, if let's say there's an internal economies of scale, it should be like this because of lower cost. So it's not W to Y, but it should be X to Y. Right. And then internal diseconomies of scale. So let's look at the two options, W to Z and Y to X. So Y to X is basically going backwards, which is not correct. This economies of scale is basically when you expand your firm's production, there's a higher cost. So this should be W to Z. All right. And then being able to lower the average cost, like pushing it below, this would be your external economy of scale, so it's something like this. So answer is C. Question 12, the diagram shows the cost and revenue curves for a monopoly market structure. A monopoly was producing at P1, Q1. The change is aimed and now produces at P2, Q2. What would not have caused this change? So A, it says it has stock it wants to sell, which is correct. It's possible. And B, it is concerned about new entrants, which is correct as well. And C, it wants to benefit from greater economies of scale, which is correct because you will have a lower cost. But at the same time, you have lower profit maximization. You won't have profit maximization. And D, it says it wants to maximize profit, which is not correct. Because if you want to maximize your profit, your quantity should be at the point where MC goes to MR. So it says D. Question 13, the government regards fresh fruit and vegetables as merry goods and subsidizes agriculture to boost their production. What could be a government failure arising from these subsidies? Okay, so fresh fruits and vegetables, merry goods, and subsidizes agriculture to boost their production, so there'll be cheaper fresh fruit and vegetables, so this is correct. And B, it says land clearance reducing wildlife, so this is a government failure because of the subsidy, because you clear up more land and this results in less animals. And C, lower spending on treating dietary illnesses, which is an advantage. And D, more jobs picking fruits and vegetables, which also helps to increase job opportunities. So D is also correct. So answer is B. Question 14, the table shows a firm that has 4 possible methods of production. Each method has a different cost and causes a different amount of pollution. The government decides that polluting firms must buy pollution permits that cost $90 each. Each permit allows the firm to emit 1 ton of pollution. No pollution can be emitted without a permit, and which method of production has least total cost? Okay, so least total cost. You can see here that in order to calculate this one, so this one, let's see, cost of production is $320 per day, 3 tons per day. So this one we take 320 plus 3 times 90, and then 380 plus 2 times 90, 480 plus 90, 700. Okay, so this one is 320 plus 270, 590. This one is 380 plus 180, 560. This one is 570, and this one is 700. So the one with the lowest total cost would be B. Question 15, the table shows the average incomes of the richest 20% of households and the poorest 20% of households in the UK, and the effects of government taxation and benefits on average income. What can be concluded from the information in the table? Okay, so average income of richest 20% is £85,000 before taxes and benefits, whereas for poorest 20% is £7,000 before taxes and benefits. And after direct taxes and cash benefits of the richest 20%, you get 68,000. And then for after all taxes, it's basically like direct indirect is 63,000. For average income of poorest 20% is from 7,000 becoming 13,000 and then 17,000. So for this one, let's look at the 4 options. A, it says the effects of direct taxation has affected the rich less than the poor, which is incorrect because as you can see here, with the direct taxes, the average income of the richest 20% has become 17,000 ringgit, whereas for the poorest 30%, it's not ringgit, pounds. 7,000 become 13,000, so it's 6,000 pounds. So A is not correct. B, the government's policy achieved income equality across households. No, because the income is not equal, so it's incorrect. And C, the government redistributed all income taken from the rich to the poor, which is incorrect because nope. You can see here it drops 17,000 pounds, but it's not like we get like 17,000 pounds back into the poorest 20%. It's only like 6,000 pounds. So D says the government's policy reduced the income inequality, which is like it doesn't reduce everything, but it reduces some. Question 16, a fashion model is paid $500,000 a year. If the next best paid job he could get is as a teacher at $100,000 a year, what are his transfer earnings and his economic rent? Okay, so here if you look at a few options here, this one you can see that the fashion model is paid 500,000, and then a teacher's job is 100,000, so it's very low. So this means that he could either choose to become a teacher or a fashion model. If he becomes a teacher, he only get 100,000. Which is, for a fashion model, that's basically the transfer earning. And then the remaining 400,000 will be economic rent. So A is not correct, C is not correct, and D is not correct. So next best job he could get 100,000 because that's the lowest price that will keep the factor of production in in operation. So that's why it's transfer earning, and then the remaining one will be the economic rent, which is above what say to keep that factor of production in business working. So answer is B. Question 17, what would be the most likely effect of the imposition of a national maximum wage? You know the market equivalent on the labour market for famous television celebrities. Imposition of a national maximum wage below the market equivalent. So 17, let's look at A, a reduction in the number of jobs for television celebrities, which is not correct. There will be more jobs because of the lower maximum wage. That means that firms can actually hire more people. And B, it says an increase in other methods of rewarding television celebrities, which is possible. C, greater movement of celebrities between television channels, which is not correct because it's for all channels, so this is not going to happen. And D, it says increased employment, there's lower demand, so answer is B. Question 18, which government measure is most likely to encourage faster and more sustainable economic growth in the country? So this one, let's look at the 4 options. A, it says subsidies to firms using recycled materials in production. Yes, that's correct. And B, grants for the exploration and exploitation of new oil deposits. This is not sustainable. You are using something that will deplete in the long run. And C, increased spending on environmental education in schools. This is not going to increase it at a very very fast rate, but it's going to be slower compared to subsidies to firms using recycled materials. It's not a very direct effect in that case, and it will take time for it to become more effective. And D, tougher legislative controls on emissions of air and water pollution. Compared to A will still be the faster option, so the answer is A. Because if you have tougher legislation controls, that means that people will try to still emit all these pollutants by going through illegal methods. So compared to A is the fastest way. 19, which statement about national income accounting is correct when gross domestic product is converted into net national income? Let's look at the four options as well. So A, an allowance for depreciation has been made because the NNI does not include output that replaces capital that has been used up. Yep. B, both GDP and NNI have to be calculated by the income method because that is what NNI is measuring, which is not correct. C, double counting is not a problem if the conversion uses the upper method, but it is when using the expenditure method, which is not correct. And D, the value of exports needs to be added because exports generate income for seasons, which is not correct. So I'll say it's A. Question 20, GDP per capita is often used when comparisons of living standards are made between a developed and a developing countries, and it's not a good reason to question the accuracy of this comparison of living standards. So A, it says it is not possible to use price indices accurately when comparing with figures because spending patterns are different, which is actually a reason to question the accuracy, which is indeed true. So this is not the answer. And B, people in developed countries enjoy very different amounts of leisure time to people in the developing countries, which is correct. And C, the extent of the unrecorded economy is very different, which is correct. And D, it says the purchasing power parity theory has been used to make comparisons. If the purchasing power parity theory has been used, then there's no good reason to actually question accuracy because the accuracy is there because of the purchasing power parity. I'll say D. 21, based on the International Labour Office definition of unemployment, which individual is most likely to be classified as unemployed? Alright. A, it says a single parent who would like to work but cannot afford to pay for childcare facilities. So this is not exactly classified as unemployed. B, a teacher who has decided to retire permanently is not unemployed. C, a redundant steel worker who is not actively seeking alternative work, this is considered as not unemployed. And D, a student who is desperately seeking any weekend job to supplement his income, which is correct. So A, you could say that he is voluntarily unemployed. D is involuntarily. So most likely to be classified as unemployed would be D. Compared to A, D would be a better answer. Question 22, one is most likely to lead to an increase in labor productivity. So 22, it says A, encouraging women to enter the workforce. That could be an option, but then let's look at the other options. B, it says increasing automation. Yes, this will increase in productivity. C, raising the retirement age. Not really, because if you raise the retirement age, then people who are older will probably have a lower labor productivity, so nope. And D, reducing a division of labor. If you reduce the division of labor, that means there's no specialization. When there's a decrease, there will be decrease in specialization. When there's a decrease in specialization, this means that labor productivity will decrease. So by comparing these four options, you see C and D is not correct. A and B, compared to encouraging women to enter the workforce, the better option would be to increase automation. Right? So answer is B. Because compared to these two options, even though technically there's more labor, that doesn't mean that the labor productivity will increase at a very high rate compared to increasing automation. Increasing automation will help to increase productivity much better than hiring just actual humans. Question 23, which components of the quantity theory of money are considered constant and which are considered variable? Quantity theory of money, so 23, money supply should be variable, so AB is wrong. And then velocity of circulation should be constant, so D is wrong. Price level is variable and transactions are also constant because this is quantity theory of money. So I'll say C. 24. 4 students are asked to complete a table showing the average demand equation and the multiplier formula for a closed economy without a government. Okay, closed economy without a government, so there's no taxation. Right, so which student is correct? So 24, the multiplier, there's no MPC, there's only MPS. So in this case, right, A is wrong and C is right. Okay, so consumption plus investment minus savings, which is not correct. Aggregate demand is basically there's only 5 components, CIG, actually 4 components, CIG, and X minus M. So answer is B. Question 25. Keynesian and monetarist economists believe different things about the way the economy works and which combination is correct. So Keynesian, they mostly focus on government intervention. Right. So A says decreasing AD will always lead to an increase in economic growth. Not exactly correct. And then monetarist economic growth is achieved using fiscal policy. Monetarists don't believe in using fiscal policy. So A is not correct. And B, increasing AD brings the economy out of recession. Yes, by having government intervention, increasing government spendings and all those. And then monetarists, the economy always tends to full employment in the long run. That's what monetarists believe. Yeah, that's correct. And C, increasing AD will always lead to increase in employment. For Keynesians, that will be correct. And then economic growth is achieved by cutting taxation. This is a government move, so it's not correct for the monetarists. And D, increasing AS brings the economy out of recession, and then full employment will always be achieved in the long run, which is not correct. Monetarists, for D is not correct in this case. Increasing AS brings the economy out of recession. For that, it should be increasing AD, so answer is B. Question 26, the table shows real GDP and unemployment for the economy, and what can be concluded from the data. So you can see that in 2019, the real GDP is $40,000 billion, and then in 2021, it's 38,000 billion. All right, and then unemployment in 2019 is 2 million, and in 2021 is 3 million. So from this data, what can we conclude? So A, it says demand pull inflation is likely to increase, which is incorrect. Supposedly at this point, the demand pull inflation will not be a thing anymore because the AD shift to left. B, it says potential output is likely to increase, which is incorrect. And C, the balance of payments deficit is likely to increase, which is not correct. In this case, people are spending less, so it's not really correct. And D, the budget deficit is likely to increase because now the government will have to spend more on people who are unemployed. So yep, that's correct. 27, the diagram shows data on various aspects of 4 countries and which countries are not likely to be most developed. So for this one, normally if a country is very developed, that means that the country would have, here based on these 4 options here, one is population of rural areas, average years schooling, GDP per capita, and life expectancy at birth. So of course, the country that's most developed would have, the highest GDP per capita, highest average years of schooling because of higher education, higher life expectancy, and lower population in rural areas. So based on this graph, you can see that the one with firm lines would be correct. So that will be country A. So answer is A. So you can see from this particular graph, the one that is least developed will be country D because of the highest percentage of population in rural areas, low life expectancy, low average year of schooling, and lowest GDP per capita. And then the second country would be country C, and then country B, and then country D. Country A. So answer is A. Question 28, one is illustrated by a Laffer curve. Laffer curve is basically about the tax revenue. So 28A, it says as income increases, fewer hours will work, which is incorrect. B, it says as income increases, tax revenue will increase, which is not correct. Because Laffer curve is about tax rate and tax revenue. And C, as the tax rate increases, tax revenue always increases, which is not correct. If you look at the graph on Laffer curve, this is your tax rate, and this is your tax revenue. So, if let's say there's an increase in tax rate, there will be a decrease in tax revenue. Like to the point where, let's say the tax rate is 50%. Let's say it's exceeding 50%, the tax revenue will decrease. So answer is D. Question 29, the government decides to increase direct taxation, and which combination would describe the impact of this policy on unemployment growth and balance of payments? So government decides to increase direct taxation, so unemployment would then worsen, right? It would worsen. So AB is wrong. And then growth would worsen, and balance of payments would actually improve. Because balance of payments, when it improves, that means that there'll be less outflow of money, and in this case, direct taxation would result in a decrease in the outflow of money. So as is C. Question 30, how will inflation and unemployment most likely to be affected by a rise in the real income tax if government expenditure does not change? So when there's a rise in the real income tax, the inflation would actually fall. C and D is wrong. And unemployment would rise because when there's a real income tax, so it means that people would have less purchasing power. When there's less purchasing power, there'll be a decrease in every demand, and then more people will be out of business because of this. So answer is A. Alright, so this is the end of this paper. I hope you guys found this video helpful. Do share this video out to other people who may need help with economics A2 level. I hope to see you again in the next video. Till then, this is qiphyedu. Goodbye.